Oh, Canada, the land of the debt-ridden consumer, more debt than anywhere else on earth when compared to income. The land of one industry, real estate, the biggest bubble ever recorded. Thanks to home insurance and ultra-low interest rates, millions have been able to buy homes that they can't afford. Then using home equity, credit cards, and student loans, they have enjoyed a fantastic living standard. There's just one problem. You came here for the truth, so let me unveil that for you. Today we are going to look at all things Canada. This is important no matter where you live around the world because this is what happens when you take on too much debt. I'm going to get into everything you need to know about the economy, about the effects of the current crisis, 2020 and beyond. Of course, we need to talk about real estate in here as well. Let's begin. All countries around the world have been suffering to one degree or another. We have seen the statistics piling up. Of course, I've shown you what's going on in different places, the US in particular. I needed to show you what's going on in Canada. Canada and the US, big trading partners. We have seen much over the last year or so between these two countries, ups and downs. I just wanted to give you an update on what's happening here. Canada lost almost 2 million jobs during the month of April. That is a record high. I want you to remember this for a second, that this is a record high number, okay? Just to give you an idea. Statistics Canada labor force survey data released on Friday brings the total number of jobs lost during the crisis to more than 3 million. Okay, so we've got 3 million people officially no job. The unemployment rate is now 13%. That's the official rate. And that had increased in the matter of 1 month. It was at 7.8%, moves its way up to 13. So a major jump, a drastic spike. But here's where it gets funny. Economists on average had expected a loss of 4 million jobs and an unemployment rate of 18%. And as they say down here, the 5.2 percentage point rise in the jobless rate was considerably less than expected and massively smaller than the 10.3 percentage point spike in the US jobless rate. So it was terrible. It was a record high. This is a historic number and situation that we are seeing today, but because it was less than what the expectation was, it's positive news. And if that isn't a spin on the truth, if that isn't propaganda, I really don't know what is. Here you can see the chart that is associated with that monthly change in employment. You see these little ups and downs all the way, and if you kind of blur your eyes, you probably wouldn't even notice what it was in comparison to this massive drop that we are seeing. It goes along with the data I showed you yesterday and beyond with the US. Same situation, same shape. All of the previous recessions look like little blips on the screen in comparison, but it was less than what the expectation would be, so no worries, we're all good. This is just an update on the unemployment rate. You could see 13% on the left-hand side. On the right-hand side, participation rate, very similar to what we saw out of the US, dropping from approximately 66% or so down to under 60% right now. This is just a chart giving us the comparison of the different job gains and losses over the last year. Wasn't looking very good actually over the last year. They've been struggling, fighting off a recession. The stock market was performing terribly. But in the last couple months, clearly there has been this trend, many people being laid off. But if you look at these headline numbers, they are meant to be convoluted. They are meant to shield you from knowing anything and everything about what's actually going on. In this case here, you're looking at the decline in hours worked, February to April 2020. Just a few month difference. It's not as if we're going back 40 years. It's not as if we're going back 10 years. It's just from February to April to give us the difference of what we had seen before everything got real serious up until today. And you see the different provinces and it breaks it down here for you: 34%, 28%, 27%, and so on. So it's all good if somebody is still working, they're still getting paid. That's fantastic. But what about the people that have had their hours reduced by 30%? It's not so good for them. They're not going to get all the money that they needed. They're going to be suffering because, in general, as I have shown you here on this channel before, Canadians, just like Americans, are paycheck to paycheck. And that's a big problem. There have been many people who have had to go further into debt as a result of what we're seeing already. As soon as they got their stimulus checks, they went and they had to spend it not on luxury goods. They were just paying off the debt. They were just doing the necessities, getting the toilet paper. That tells you something, and it should be a warning to everybody, no matter where you live around the world. Whether you're in Italy or Spain or Australia or Vietnam or the US and Mexico or Canada, everybody runs into the same issues when you look at it for the big cities. There's no doubt about it. When you look at certain places like Toronto real estate, or in Tokyo or Rome, or the major cities of California and New York, people push themselves too far and they can't dig themselves out. And every time there's a crisis, that's when we find out where the problems are. Not when everything's running smoothly, not when they're able to take on more and more and more debt. And so just like the average individual, governments are doing the exact same thing. They're finding themselves in more debt. We see this on the national level as well as you go down the food chain, exactly the same problems. Here is an article out of CBC. It's talking about the deficits. As the fallout from the current issue in 2020 adds hundreds of billions of dollars to the national debt, senior federal officials say there would be no aggressive attempts at deficit reduction until Canada's economic recovery is well underway. That's right, you can add to the national debt, which by the way in the US peaked over $25 trillion. It took 28 days to add $1 trillion to the deficit. That is unbelievable. But anyway, when you look at this on Canada, which is a smaller scale, it's basically the same direction. Print as much money as you want using the central bank. Bank of Canada is going to do whatever they want right now, and then you have all of these deficit increasing programs put in place. Most of the money is wasted. Most of it is squandered. Some of it trickles down to people. They get the crumbs, they get the scraps, but ultimately the big businesses, namely the large banks, are always profiting off of the transactions. I think deficit reduction really can't happen until you know the full extent of the damage and until you get a measurement of what this did to us. If you want to make this as painless as possible for people, you wouldn't rush it. Now, I just have a very, very small question here. If clearly they're not concerned about deficits, they're not worried about debt, they're in no rush to turn this around at all, why not just maximize the deficit and the debt? Why not just continue to go into that hole as much as possible? That's my question. It's not a rhetorical question. I'm asking that question. Why don't we just print up $1 trillion and give it to every single person? Since the biggest problem the government has is trying to generate more inflation. They're always saying that. If you look at, for example, the Federal Reserve, they come out there. The ECB is always there. Bank of Canada, Bank of England, they're all saying we're having a hard time generating inflation. Well, if that's the case, just print up $1 trillion, give it to every single person. Now we're all trillionaires. Everything's going to be fantastic. Is it? Tell me. Let me know in the comments below. Just a quick note here, as they say, 5.5 million Canadians are in trouble. I do think that this number is actually bigger, and in the next 30 days, even these official stats are going to be growing. I'm not going to get into the details of this, just wanted to show it to you, and you can of course look at it by pausing the video or looking in the sources in the description. Up and down month for Canada's economy. While Canada's economy grew by 0.03% in February, not all sectors were headed in the same direction. What's important here is that even before everything started to come down, the economy was already weak. That's the whole point. Monthly percent change in real GDP. There's no growth. There is absolutely no growth happening. It's been such a serious problem since 2018. As I've highlighted, globally, we see the exact same things going on. This article is out of the Financial Post. What worries me is that crawling out of this economic hole is already going to be extremely challenging. Because think about it, we've only really just begun and already it's having a serious impact. We're worried about the rise in defaults and delinquencies among businesses and households. And every time we shutter the economy, we risk another wave of defaults. This is so key to understand. This is what I've been talking about on the previous videos. Of course, I know that if you're a subscriber here, you've heard me repeat that over and over again, but we have already seen that climbing up. We know the result of this. This has a major impact on the lenders. This is going to spiral out of control because they open up places, I think it was Georgia and some other areas, where they would open up the malls and nobody's really going there. So it's not as if they flip a switch, economy's back on, and we get the V-shaped recovery. If you notice, less and less articles and analysts are mentioning that stupid term anymore. They're going to a U-shape, if anything at all, or they're just saying we're going to get back on track, it's going to be this and that. They're not necessarily using this anymore because they know that there's no possible way that it's going to unfold like this. I don't know why they were talking about that, even though there's obviously that propaganda behind it. They want to push it in that direction. But people, although they're busy and they're confused and they're worried and things, they're not that stupid. They can see what's going on. Debt is ultimately the most important thing, not because of the average individual and the impact it has on them and their family, though that can be very devastating. Of course, this has a ripple effect. I talk about that all the time. Essentially, what we have is an individual with a problem that comes back to the lender. That bank, for example, is giving them money, but they're not able to pay it back. So suddenly they have a portion of their portfolio, if you want to think about it like this, that's starting to go bad. It's starting to rot. But of course, all of that is connected to derivatives, these debt products, because your mortgage, your credit card, your student debt is not yours, and the banks, it has now become an asset and they are using it to game the system. The financial companies have been allowed to get away with this financial alchemy, creating things out of basically nothing. These derivative products are all connected to the debt. So you just have people that can't pay their debt, it starts to unravel. We saw that 2008. You've heard me ramble on about that many times before. Okay, so take a look at some of the main points of this article. Canadian households are asking banks if they can skip a few payments, and banks are mostly saying yes. Canadian Bankers Association data shows hundreds of thousands of payments are being deferred. The number, as big as it is, represents select member banks, meaning there's many more deferrals. Even using this data, it works out to billions of payments skipped over the next few months. This is going to cost consumers hundreds of millions in extra interest. Canadians deferred over 720,000 mortgages. And then at the bottom here, Canadians also asked for over 417,000 credit card deferrals. This doesn't represent everybody in the country, just like what we saw with the US. I've shown you the stats for different places around the world, but understand the concept is the same. That's the whole point of me showing you different countries all the time. No matter where we're looking, it's basically the same. People are in too much debt, they can't pay their bills. And then really quickly, I also wanted to stress the fact that we have Airbnb and all of these other short-term rental companies that are also applying downward pressure because as time goes on, as the days go on, these individuals, their entire business of short-term rentals is truly evaporating. They might have bought the place specifically because it's near a certain location and they're able to get people in there regularly, and then all of a sudden, zero business. So what do? They could try to sell it right now, but the market's pretty frozen. There are so many different reasons why things are messed up today, and it's not going to simply turn around. If you want a really big laugh, at the very end of this video, I'm going to link to a video I did just recently about Canadian real estate. The vast majority of the people, my subscribers of course, they agreed, they understand the bubble, but there was so many people that are in denial about what's happening. They actually believe, somehow, I'm not sure, but maybe they've convinced themselves that there is no maximum, there is no ceiling to the amount of debt that people can consume. Of course, that is illogical, and that is no doubt going to be met with a problem at some point in the future. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me. I want to thank you for that. Just click that like button and you're helping me out. Thank you. If you want to see content every single day that's on Instagram and on Twitter, I'm creating stuff very regularly. You might want to check me out at The Money GPS. Many months ago, I created an e-course related to selling online. There's well over 6,000 people in this here, and unlike those other guys, I actually made it free. Unfortunately, not enough people take action, but regardless, you should at least learn the free information. It's not going to cost you a dime. Check it out, theamazongps.com. If you want to understand the financial system and be able to ask the right questions, maybe you've got a financial advisor, maybe you're looking through these articles and you don't quite get it top to bottom, these two books are going to give you exactly what you need. Check them out at the link in the description if you want the audiobook, themoneygps.com. This video right here had well over 150,000 views in just a few days. It's about Canadian real estate. I just did it maybe a week ago. Click on it. I'll see you there.